The Reserve Bank of India, RBI, operates with the primary objective of ensuring monetary stability, managing inflation, promoting economic growth, and maintaining the value of the rupee. Although it may not be classified as a traditional not-for-profit organization, its focus is not on generating profits for itself but rather on fulfilling its mandate. One of the ways the RBI generates revenue is through a process called Seigniorage. When the RBI prints currency and puts it into circulation, it effectively creates money out of thin air. Banks that receive these notes must purchase them from the RBI at their full face value. The cost incurred by the RBI to print the note is minimal, usually around 2 rupees. This means that for every 100 rupees note issued, the RBI effectively generates a profit of 98 rupees, which contributes to its overall income. The RBI utilizes these profits in various ways to further its objectives. It lends money to banks for their daily operational needs, earning interest on these loans. Additionally, when the Indian government issues bonds to raise funds, the RBI purchases these bonds and earns interest income from them. It can also invest in foreign assets, such as US government bonds, which provide additional interest income and exposure to other currencies. The RBI actively manages its foreign exchange reserves, capitalizing on fluctuations in exchange rates to generate profits. For example, by buying foreign currency when it is undervalued and selling it when it appreciates, the RBI can realize gains. By employing these strategies, the RBI maximizes the returns on its initial investment of printing currency and generates substantial profits. In the financial year 2022-2023, the RBI recorded a profit of 2.20 lakh rupees crores, a significant increase from the previous year. While the RBI does incur expenses such as printing costs and payments to staff and external banks for certain services, its overall expenses remain relatively low compared to its income. As a government-owned institution, the RBI is exempt from paying income tax. This allows it to retain a significant portion of its profits for allocation to various purposes. In line with its prudent financial management approach, the RBI sets aside a portion of its profits as a contingency fund. This fund acts as a financial buffer in case of unforeseen events or economic crises, ensuring the stability of the banking system. In FY23, the RBI transferred 1.30 lakh rupees crores to the contingency fund, demonstrating its commitment to safeguarding the economy. After allocating funds to the contingency reserve, the RBI distributes the remaining profits as a dividend to the Indian government. This dividend serves as additional revenue for the government, which can be utilized to meet various expenditures, such as infrastructure development, social welfare schemes, and defense. In summary, while the RBI is not explicitly a not-for-profit organization, its primary objectives revolve around monetary stability, inflation management, and economic growth. The profits it generates through seigniorage and other strategic financial activities are essential for fulfilling its mandate effectively. By utilizing these profits wisely, the RBI ensures the stability of the banking system, contributes to the government's fiscal position, and supports the overall economic well-being of the country.